Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the possibility of USD JPY breaking out from the current consolidation phase which has kept it range bound between 107 to 109 and moving higher towards 109 and even eventually towards 110 levels. So we will see if we can exploit that possibility to our advantage. If we consider today's trading context, earlier in the day we got Reserve Bank of Australia's monetary policy announcement, and as expected, the RBA left interest rates unchanged at 0.25%. It has, of course, expressed concerns regarding the job losses and the economic downturn. The job losses have almost climbed to zero point 0.6 million in the Australia, and the Australian economy has also taken a deep hit. And even if we take a look on the global commentary, the situation prevalent around the world, there also the Reserve Bank of Australia expressed concern, and it said that they are not really expecting any recovery anytime soon, and it will be only a gradual recovery. But one thing to take note of is that RBA feels more confident with the kind of data that has been coming in of late regarding the outbreak, and since things are not actually bad as was the expectations in earlier months, and because of that some positive upside is possible on the economic front as well. And if things continue to pan out as they have in recent weeks, and more global economies are able to bring back the workforce to the industries and open up their economies for the commercial activities, then I think this downturn won't be that severe. It is already severe to the extent that this is being called the greatest depression since the Great Depression of 1930s, and things are even worse than the 2008 financial crisis. But still, any upside, any optimistic outlook is a welcome development, and let's see how things will shape up in coming weeks and coming months. If you consider the equity segment of the financial markets, the things are buoyant here. Even now, as the European session is underway, we are seeing most of the major equity indices in Eurozone are trading higher, and the gains are even more than 1 percentage point, in the vicinity of 2 to 3 percentage point. For Germany, it is more than 3%, but that is after considering the yesterday's closer, so that is the adjustment is there. But apart from that, the fact is even other major equity markets are trading higher. Even in the Asian trading session, we saw major equity indices closing higher. Now, the US equity futures are also higher, but the magnitude is not that significant. And one of the concern, one of the fact that is the turmoil, the protests that are going on in the United States, and that is also giving fresh worries of a new second wave of the coronavirus. So let's see how the US administration and how the people responds to these new challenges which they are faced with. Now let's shift our attention to the technical segment. Here we will be considering these two instruments, and these were the same instrument which we covered in the yesterday's session as well. And outlook has not changed much. We yesterday were also looking at the buying possibilities, and if any of you had taken those trades, I think there might be some decent profit as well even now. And even for today's session, I think those are promising setup, and some fresh light, some fresh clues are also emerging, which we will try to incorporate in today's session. In yesterday's session, we saw after getting high closer to 107.9 level, the USD JPY eventually settled lower closer to 107.5, 107.6 level, and now again in today's session we are seeing uptick. And here you can notice a bullish crossover of 10 and 20 EMA. It has started to rain heavily, and because of that, some noise might be there in the background. So pardon me for that, but we will need to continue with our session. Now, I think this uptick which we are seeing in the USD JPY after this long consolidation here, you can notice it has been almost 2 weeks where the range has been pretty narrow for the USD JPY, and now as things are looking like, we can expect the USD JPY to get a break on the upside, and if that really happens, then I think this next resistance zone is going to be the immediate swing high, which is just little above 109 level. On the 4 hourly chart as well, we don't really have any significant resistance inside. The next resistance is going to come into play around 108.7 level, and this consolidation has been consistently in the bullish trajectory even for this month. We are seeing that yesterday's start and then this reversal, which happened pretty close to this central pivot point, has kept this price action in the bullish zone. As long as the price action is in the this above, it is above this central pivot point. Till then, we can be fairly optimistic of the possibility of USD JPY moving higher, and any break after this consolidation, and also if we consider this formation, it is of higher highs and higher lows. Here also these lows which have been established during this consolidation are fairly higher compared to these prior swing lows, and so we have these fresh swing highs. So even from price action perspective and also the regression curve perspective, as well as these pivot point series perspective. So all these three factors are pointing to the possibility of USD JPY continuing its upward momentum, and because of that, I think we can be fairly optimistic about the possibility of USD JPY moving towards 109 level. So if we are to look for any fresh opportunity in the USD JPY in today's session, I think we should concentrate on this confluence area, the 50, 100 and 200 SMA area, which is there around 107.6. Even in yesterday's session, we had talked about the possibility of getting involved in the USD JPY around this 50 SMA level. When we did yesterday's session, it was trading close to 107.6, and from there on, it consolidated in this 10 to 15 pips range, and then eventually it picked up the momentum, and we were considering this possibility of keeping the stop losses just little below this immediate swing low established around 107.35, and now that has really gone well. But if you have missed out on that opportunity, I think the things are still promising enough, and if we get fortunate enough to get the USD JPY on the lower side towards the 50 SMA zone, then I think that would be an excellent development for us. So let's see how things shape up. You can even think about going for the USD per trade straight away at the market price. But the only thing which needs to be kept in mind is that in that case also the stop loss remains the same. A stop loss anywhere close to 107.30 should be good enough. And then if you are going in for a market open anywhere close to 107.7 level, your stop loss will work out of around 40 pips, and then on the higher side you will need to target at least 80 pips or beyond that, and I think those levels are fairly possible. Even if we consider 80 pips target, the target for the trade will be around 108.5. Now let's consider how the gold is looking for today's trading opportunities. This is the daily time frame chart, and here also gold has not moved much since the last session. We have already seen this consolidation, and now after this turnaround, which happened closer to this 23.6% Fibonacci retracement of its rally, starting from 1,450 to almost 1,750. These 300 points move, and now it has entered into a consolidation zone. If you notice, this consolidation has been going on for almost 2 months now. It saw these sharp moves first on the downside, then on the upside, and from there on, the momentum has waned. But I think still, from short to medium term perspective, we are not really looking at a breakout above this high. But from short term perspective, I think we can still continue to look for scalping kind of opportunities in the gold, and things are looking fairly optimistic for the gold here. We have this central pivot point around 1722, and now we can continue to hope that this price action, which has been in the bullish zone for the considerable amount of time, will hold good this time as well. As long as we don't really get a break below this crucial support zone, we can be fairly confident about our trading setup. Even in yesterday's session, we were talking about this possibility, and we had this reversal happening closer to 1730. Even in today's session, the levels hold good. Anything above this central pivot point, I think, is promising bet. Of course, you can actually never know if there is going to be any dip, or if eventually it is going to go wrong. We are not really betting on that, but the thing is, we are betting on this regression curve and this standard pivot point series, as well as the price action, and all these things taken together are pointing to the possibility of the upward momentum continuing in the gold, and because of that we can be confident of our trading setup. So taken together, we also have this immediate swing high, which was also prior swing low for this consolidation phase, and then as we got this break above downward trajectory, here you can notice this confluence area of 100 and 200 SMA is also close to this horizontal price band, this price support around 1720. So we have a couple of factors pointing in the same direction. We got this golden crossover on the bullish side in yesterday's session. So that is also one more additional factor for us to feel confident about this trading setup. So I would suggest that though the gold is at the moment around 1735, and if we get fortunate enough, if we get lucky enough, if we see further correction and then consolidation closer to this 100 SMA area, then I think that would be an excellent possibility, excellent opportunity for us, as that will make our stop losses fairly sharp. Any stop loss just little below this immediate swing low, closer to 1710, should be good enough. So if we get the trading possibility, trading opportunity to go for a long side close to this support zone, then that will mean that our risk is limited to only 1%, whereas on the higher side we can target more than 2 percentage point move. So that will be an optimum trade setup from our conservative trading system as well. So that factor needs to be kept in mind as well. So here we have this trading opportunity to go long in the gold, and let's see how things shape up. If suppose if eventually we don't really make money, and if the trade goes wrong, then also we won't really be losing too much money, as we have this stop loss in play. And I think we should be taking the position sizing only according to our capacity to lose in case we go wrong. And then on the higher side, we can expect a turnaround and then retest of this immediate swing highs closer to 1755. So that will give us a risk reward ratio of at least 1 is to 2. And if you can hold on to the position, then maybe if we see a fresh breakout, then that will extend the risk reward ratio as well. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in a financial instrument, and one should be careful while utilizing the information provided. Have a profitable day ahead. See you tomorrow. Goodbye.